You're investing in yourself with the knowledge.
Knowledge.
So I definitely would never say that it. What's going on, guys? Donald Bowles here. Welcome back to the channel. Hope you guys are having a great start of your week or mid your week so far. Hope the market isn't destroying you too hard. So let's get right into it. I've been getting this a lot. How much money do I actually need to start investing? So let's just jump right into it. So right off the bat there with this question, it's actually pretty vague, to tell you the truth. We all come from different income levels, different places around the world, so there isn't really one right answer. I'll jump in definitely on the different ways I see things, my personal opinion on it. But depending on how you feel with investing and a lot of other factors, income level, where in the world, everything else, you can kind of see it differently as where you think a good place to begin is and where you should probably wait a bit or wait for a bit more income. A lot of this comes into your expectations in the market kind of thing. So we're all in the market to make money. So this really comes into effect of what you're kind of seeing, what your returns want to be, and what your expectations and needs are kind of in life. If you need a larger income, if you need smaller amounts of money to come in, if you're just doing this for fun, if you're trying to make this a real career, this is really going to come down to where you are in life and definitely your situations, your costs, your expenses, and pretty much just how this positions in your life. Do you have a job, no job, trying to make this your only income? You have multiple streams of income, you're 19, you're 40, trying to save for retirement, just trying to do high risk stocks. It's all going to come down to your personal preference, but we'll definitely we'll jump into it and I'll give you my personal opinion on what I think of it. I think a better question on how to word it for sure. Instead of asking how much money you need to start investing, it's how much money theoretically would you like to get in return is a lot better way to put it. If you're putting $1,000 in, you aren't going to expect to see an extra $1,000 come out every month. So it's kind of getting the realistic mindset in a way of trying to see the bigger picture kind of thing. Stock market all comes down to your risk and your reward factor kind of thing, risk tolerance. And the more risk, the more potential reward. Nothing's for sure, nothing's 100%. So a lot of it's going to come down to your profitability personally, but there's definitely some rough numbers you can run to see in a way your estimated revenues, you could say, your estimated net profits. We're also going to take a peek at if you're looking at more of a dividend portfolio or more of a aggressive stock market trading portfolio. That's definitely going to change your income, but there is variance when you start getting into the day trading and swing trading opposed to long-term investing in dividends, where there's more concrete evidence of where from where your income's going to come and the averages. So definitely take that in consideration. So the first question you're definitely going to have to ask yourself is the success rate of it all. So personally, I work with a lot of mentor program groups and investing in themselves, and I've seen any half decent successful people go from 55 all the way to about 85-90% in successful trades. So you're really going to have to do the math on what you're trying to make on average. I can probably average about 70-80% success rate on average. I mean, no one's 100%, but if you're only making, if you step back and look at it and you're only making 25 to 30% successful trades, even if you're making like 100% on those trades, you're going to get burned on all the other trades and it's not going to pay off in the long run. So definitely starting off, I definitely recommend paper trading. There's numerous sites that I'd recommend just getting into. It gives you a fake portfolio, fake money, but you trade actively in the stock market. It gives you a confidence boost and also just gives you a sense of understanding how the market goes. There's a big psychological thing in a sense that a lot of people overlook in the markets. It is different when you have your own money, of course. The stress factor is a lot higher, but you're definitely getting the idea of how you invest is definitely going to benefit you. And I definitely recommend, personally, I started investing at a younger age, and I just went balls to the wall, threw my money in and just hoped for the best, and I blew up my account once or twice right off the bat. So I definitely recommend, you can check them out. They'll all be free links. You all get a portfolio. I've definitely used these before, and yeah, definitely a great place to start, I'd say personally. So the next step really is seeing the reward factor of your investments. Personally, I shoot for about 1 to 2% a day, 2% optimal, but I mean, I'm happy with 0.5 to 1% a lot of the time. But you just have to take in consideration how much that is in regards to how big your portfolio size is. If you're only trading, if you're only trading with $100 and you're only getting like 1% a day, even throughout the entire week, that's only $5. There's some people, the learning process, that might be worth it. But I mean, if you're 50 years old trying to, begin to get a retirement, or, maybe you didn't luck out with your finances and you're trying to build a retirement fund, $5 a week isn't going to cut it. But I mean, if you had, but yeah, when you look at, if you had a $100,000 account and you're averaging 5% a week kind of thing, that's $5,000 in a week. A lot of people are dreaming of money like that. So it all comes into context of A, how much money you're looking for, and B, your consistency rate. If you average 1% a day 80% of the time, but you end up losing 1% one time a week, that's only 3% instead of 5. So you have to take in consideration your profits and your loss in the totals. So just looking, for example, $100 is always a good baseline, I find, for people trying to get in the market. See how much $100 a day would cost you. So if you're looking to make $100 a day and you only have a $1,000 account, you're going to be having to make 10% per day. So if you're only trading once per day, that's a 10% trade. On average, not lately with the coronavirus, but on average, 10% days in the market would be kind of rare for the average stock. I mean, maybe for trading leveraged or volatility kind of styled stocks, but then you have to look at how good your consistency is personally, and if you could do that consistently day after day after day. If I can make 10% one day, I end up losing 5% the next 4, it's not profitable for me to try and get into this market. I normally stray away from this stuff. I will do some of these kind of trades with natural gas, but it's not the entire account, it's small portions of it, and I offset the risk with a dividend portfolio and a lot of other concepts with that. If you're looking to make $100 a day and you have a $2,000 account, that's 5% a day. So you are getting down there. 5% a day is still insane. Like if you do the compound interest on that, if you could do 5% a day kind of thing and you do that for 2 years, you could be retired easy. Whatever your portfolio size is now, you could be done easy. It's still not really realistic, I find. I mean, there are some people in the world doing it. Personally, as I said, I shoot for 1 to 2% a day. 5% a day would be a really good day, a super green day. Earnings reports and everything else, I could see like a 5 to 7% day. But as I said, I'm not risking my entire portfolio on one trade like you would probably, like you'd be attempting to do with these smaller accounts. So I definitely, it's not a reasonable percentage trying to shoot for daily, especially if you're a new investor. It takes years to kind of get to these percentages anyway in general. But a more common one that I definitely see, this is like the number one, this is like the most common one I'd see, the most plausible. If you're shooting for 1% a day, as I said, what I try and shoot to do, if you're trading with a $10,000 account, definitely in my opinion would be not the starting amount you need, but if you're looking for a consistency of trying to make $100 a day, let's say, I'd say a $10,000 account would be the best bet. 1% is doable. 1%, the normal average of the market's normally about 1% up or down. So that definitely is plausible. You still have to do your research. It is hard to get all your trades and your consistency up there. But I mean, 1% it's not that hard to do if you know what you're doing. Takes a lot of research and practice, but I would recommend that. The big thing I find with this, when you're trading with, the 1,000, the 2,000, the smaller accounts, a few hundred, you get really discouraged. You put in all this time and effort and you're really trying to, you want to feel good about your investments. Like the whole concept, like you go to a job, let's say, and you're working $15 an hour. You see every hour I put in, I get $15. So looking in the market, if I have to put in, 20 hours of work and I'm only pulling out like, I don't know, like $1,000 at 1%. Let's say I'm only pulling out $10 and I have to put 20 hours in. It can really discourage you right off the bat. And I mean, you're investing in yourself with the knowledge. So I definitely would never say that it's a waste of time, but I know, from a psychological standpoint, it kind of eats away at you when you start thinking like, I did all this work and I only made this money, like I should just give up. But you miss 100% of the shots you don't take. You're never going to be making these big dollars in the stock market if you gave up when you're only making a few. I mean, every day that's a green day is a win kind of thing, and you just got to look at it as baby steps. Honestly, if you're only making, a few dollars a day, if you can get your consistency up there, then you can definitely, you can start throwing in more money, you can work a side gig, anything else. But once you have your consistency and once you can see yourself actually being profitable in the market, that's definitely when I recommend upgrading the portfolio size, going from paper trading to real trading, and just really, it's just getting a feel for it kind of thing. Like, the worst thing you can possibly do in the market, as I said, is throw all your money in, have no idea what you're doing, and just watch your hard-earned money slowly depreciate until it's nothing. You get scared, you pull it out, you buy back in thinking it's at its lowest, it goes down further. It just eats away at you, and you suddenly don't want to do it anymore if you start figuring out that all you're doing is losing money. So I would definitely recommend, paper trading and just shooting for realistic numbers, like 1%, 2% right off the bat. Just get your feet wet kind of thing. As I said, there's nothing wrong with, a green day is a green day, as I say. I'm happy if I see, a $50 account, but, I'm happy if I see, $50 at the end of the day in my account. I'm happy if I see like $500 at the end of the day in my account. It all comes down to that mind sense, but I definitely say right off the bat, work on your consistency more than like the physical dollar amount. If you can make 1% at $100, then when you start upgrading down the line to, $100,000, $1 million, and this 1% is like a massive amount of money, it's going to benefit you more, but it's the same practice kind of thing. You'll diversify and everything a bit more, but it's the same practice. It's kind of like the foundation, the fundamentals you have to learn, and once you can get that, you can kind of do it at any stage in the financial ladder, I guess. So yeah, once you get past your financial growth itself, your consistency, and just the percentages you're shooting for in the day, whether they're realistic or not, you also have to take in consideration the fees. More recently, a lot of companies have been pushing to commission-free trading, but if you're a person like me in Canada, we only have Wealth Trade Simple, which would be our only commission-free broker currently in Canada. Speaking of Wealthsimple Trade, a word from our sponsor. The following video is sponsored by Wealthsimple Trade. Click the link in the description for a $5 bonus when you deposit and invest $100 or more into your account. So yeah, personally, I use Wealth Trade Simple for a lot of my longer term dividend and just kind of longer term hold investments. I wouldn't recommend them definitely for day trading. I find some of the charts not obsolete, but they're kind of slow. They're friendly to look at, but they're kind of like curved slopes when you look at it. And if you're doing day trading and those pinpoint numbers, I don't really see value in it. You're losing key information with small trades, especially with penny stocks. But if you're looking for dividends and longer term holds, I mean, I wouldn't go wrong with it. Yeah, the link, as I said, will be in the bio there. You invest $100, I get $5, you get $5, we win. And yeah, I mean, give it a shot. At worst, you don't like it, take your money out and do something else, but you got $5, so yeah. But for a lot of my day trades, I personally use TD with their advanced web broker system. You guys have TD Thinkorswim in the States, kind of same concept. You guys got the cooler one. If you win some, you lose some. But you gotta look at your fees and your trading. I know recently in the States you guys went commission free, but still in Canada here, for a lot of your entry-level brokers, especially with your banks, it's going to be $9.99 to buy and $9.99 to sell of whatever currency you're buying in, whether it be Canadian dollar, then it would be $9.99 Canadian, or if you're in the States, it would be $9.99 US. So I mean, that adds up to about $13 Canadian when you start doing your trades. So you have to take in consideration, if I only have an account that's $100 kind of thing, and I'm trading, if it's $10 to buy, $10 to sell if you're rounding it there, that's 20% I have to make just to break even. So you really have to, speaking about discouragement, is it worth it at that account value to start investing? The average market returns 7 to 9% in a bull market. So you really have to take in consideration, do I want to be waiting, 3 years just to break even on a few dollars? Like, it comes down to that. A lot of these traders, personally, I've got my account down to about $5.99 or something like that when you become an active trader. So definitely the more you trade, the more you can benefit in this sense. But I would definitely, I take in consideration the numbers. Sometimes you can get tax deductions and everything at the end back. But you definitely got to take into effect how much the extra fees cost kind of thing. If you're trading with $100,000, for an example, $9.99, you aren't even going to notice it kind of thing. Like the smallest percentage would push that over the top. But starting off, I can find it discouraging. The second you buy, you're already in the hole in the red. So it kind of hurts, and the less amount of money you have, the bigger the percentage move to get out of it. So I personally, when I started, if I invested a few hundred into a certain company, unless it was super volatile, it just didn't, it didn't have the risk reward factor for me. There was such a long-term waiting, especially when you're trying to get the ball rolling right off the bat. So I definitely recommend, personally, when I was starting out, I'd at least invest, $1,000 into a company, diversify. You had a $3,000 account, you want to, lower your risk, $1,000 in 3 different companies. It's still 2% to break even, but 2% is a lot better than 10%, 15%, a lot of these other numbers that people are trying to do. So I find 2% very doable. Like you get these tech stocks moving like 3-5% a day. You can break even in the end of the day, and that feels good. And it gives you kind of that mental recognition and success that like I can do this, thinking like I can break even in the end of the day. I mean, longer term investment, you might not care throughout the day. I just found getting the ball rolling. If you want to be successful investment, it's all about compound interest and how fast you can buy and sell, and how fast you can grow your money. And I found if I had to wait weeks on end just to see it break even, it kind of discouraged me in a sense. But it all comes down to your personal preference, as we said earlier. If you're just, if you're just investing on the side and you just want to let your money grow for 10, 20, 30, 40 years, that might be fine for you. You might not mind that at all and just throw a few hundred in each company. Personally, I work on more aggressive trading, so I'm looking to break even as fast as possible and profit as fast as possible. Take out the money and do it again with a larger sum. You're trying to compound it up. But it all comes down to your personal preference. This doesn't affect a lot of people using their personal banks and brokers that have a commission fee. But I know some brokers like Robinhood and the commission-free ones, they will have a limit on how many times you can trade in the run of a week. So I believe Robinhood, you can only trade 3 to 5 days if you're day trading. Otherwise, you get flagged as a frequent trader and your account's blocked for 90 days. So when trying to grow an account initially, you definitely have to look into, is it worth it at this such a small value, on top of everything else, on top of your risk, on top of your success rate. If I can only trade at most 3 of the 5 days, if I'm trying to day trade, does this make sense for me to invest this much time at this point in my life to try and get these profits? If I can only make, if I'm only making $5 a day and I'm limited to only being able to do this 3 times a week at most, I'm only making $15 a day. If I had to spend 9 hours, let's say, doing research and everything else, trying to follow up on this stuff,
knowledge,
I wouldn't see, $15 spread over 9 hours making it worth it, in my opinion, personally. But it's also another thing you got to take in consideration. It might not be a fee, but it's a limitation. It's your time value of money is going to limit itself here by not being able to get the ball rolling in compound interest kind of sense. So that's a factor that not everyone has to take into account. But I find a lot of people overlook it, and I see a lot of chat rooms. I'm in Robinhood chat rooms just for kicks kind of thing, to see what they're trading with all their penny stocks. But I definitely would take into account the fact that you're limited on how aggressive you can trade. So yeah, after you look over all your limitations, all your factors that are going to affect how fast you can grow your account, you really just got to look at it in the sense of, how much can I grow? If you're trying to turn this $1,000 account into, a $2,000 account, make $1,000 profit, when looking at it, you kind of got to look at the growing factor of how fast you can grow your account. I'd love to get some people would love to get $1,000 in a few weeks, some in a day, some in a few minutes, some in a few years, but it's how fast you can grow your account. I found starting out when I only had a few thousand, it was discouraging. You're only pulling in like 20 here, 30 here. It was like, how could you increase it? If you're only starting with a few hundred and all that, I definitely recommend, if it's possible. I know I'll get some hate in the comments below, people telling me they don't have time, they already work like 20 jobs, they haven't slept in like 3 weeks. But trying to work a second job, get a second source of income or multiple source of income. If you're already working a job in the daytime, or you're a student, you're working part-time, 3 times a week to pay for your housing, your food, everything else. If you could even pick up 1 shift a week in a separate job, maybe an extra shift or anything, and you only put that money into the stock market or into your account. If you only put that money into your account and then into the stock market, it will help increase the growth of your account. And even if your account isn't growing at a crazy level, if you're only doing like a few percent a week, you'll still feel good about yourself knowing that like your personal financial value is growing. I started doing that originally. I was working a few labor gigs kind of thing, driving moving trucks and everything else when I was younger. and I wanted to make more money. So originally when I was too young, I actually got into an iPhone repair business kind of thing. And luckily for me, that was extremely profitable, and I was pulling out like a few hundred a week kind of thing right off the bat. But currently right now, I mean, I do a lot of the investments throughout the day and have a few kind of jobs and everything else. I'll work, just doing some graduate classes and everything else. But I bartended. I started with, one shift a week, one shift every 2 weeks. But the tip money and just the extra pay, all that money now, I could pay for all my expenses to start with my other gigs. And then that job itself, 100% of that money would go into the market. And then, if I was only growing like $100 a week at the time in the stock market, but I could put in another $100 with my job, let's say with the tips I got off bartending, then suddenly your account's growing at twice the speed for this duration. And it's just the exponential growth. You don't have to sit so flat on the curve for so long. You can kind of start to get that uptrend. And it feels really good. You're starting to actually, you're starting to get the ball rolling. And the more money you have, the more money you can make. It's kind of like, you're increasing how fast you can go up those steps in a sense. So it's just, mentally it feels good. I mean, financially you're growing your account at a great rate. And it just increases it. I mean, a lot of us would love to kind of day trade, full time. And it just increases the opportunity for you to be able to do that. Plus, you're making more money kind of sense. It's as long as you aren't swamped, as long as you have your health, your wealth, and your happiness kind of thing. You're increasing that, that wealth factor so it's definitely, it doesn't hurt either way. At worst, I mean, if you want to go out with your friends now you have extra money kind of thing to do it. I definitely, recommend limiting how much you go out when you're trying to, get in the stock market and try and put all your money in investments just to increase compound interest. But, just having the extra money, it's hard for a lot of people to think about, like to get a second job, to get an extra shift a week. But from a financial standpoint, like if you're willing to work hard, the work will pay off in a sense, and you can prosper. There's an opportunity, you open up opportunities, and the opportunity cost of not having that money is no longer there. So I definitely recommend, if it's possible, try and find other ways to, get other income streams right off the bat if you only have a few $100s. And I find, the faster you grow your account, the better you feel, the more confident you are, and of course with proper learning, you can suddenly increase how fast your account grows. As I said, if you have, $10,000, you're going to grow it a lot faster than if you only had 100 or a few hundred. So it's definitely a factor taken into play. And I mean, at worst, you got another thing on the resume there. So, and I don't want to segregate anyone in their age demographic or their financial situation as is. I know for some people, $1,000 is just kind of, spending money on the side, buy a new pair of shoes, something like that. Maybe $1,000 is nothing for you, or $10,000 nothing getting in. But for some people, $1,000, that's maybe they're in debt right now. $1,000 is a big kind of investment. So I find it's just the steps of mentally thinking, like day by day, if I can increase this, and every day looking at it being like I'm one step close to where it is. If you can put $1,000 in, $50 in, like whatever, like every little bit helps, and every time you have that successful trade, the profit margin is going to be that much larger. So I definitely recommend, funding your account in the fastest way possible. But you also got to take in consideration like where you are in life, and you got to take in consideration where you are in life, and just how feasible it is. Like in my mind originally, I'd have one good night on bar, make like $300 in tips, and I'd be like, we're going to make these tips every night, we're going to fund the account, like $500 every 2-3 days, I'm going to be rich in a week. But realistically it didn't happen. There's variable things that happen in everyone's life. There's car payments, you got insurance, everything else, rent, and it's always not feasible for everyone. So it's, looking back at the question, how much money do I need to start investing? There's no number that really comes down to it, but we're all in different financial situations. So for me just to say you need $10,000 to start investing would be dumb, and it wouldn't be feasible for some people. So it's just, I definitely recommend starting paper trading right off the bat, but I also recommend, it never hurts to invest in yourself.
Knowledge.
And definitely your mentality of it. The knowledge you can gain when you have no money can benefit you when you do. So I definitely recommend, it's not always fun looking at charts, it's not always fun going on YouTube scrolling through these kind of videos. But if you can kind of indulge your knowledge and understand, like, okay, I have no money now, but I know how the market works and how to invest. Now when I have money, now I'm ready to go. Now I don't have to wait. I don't have to wait any time to get into it. So there's a big factor of how much money I can put in, but there's also a factor of how much knowledge you have. Like, knowledge is power, as Ty Lopez says, you know, in his garage.
But you know what I like a lot more than materialistic things? Knowledge.
It's definitely beneficial to have, and I definitely recommend getting some sort of income, whether it be your financial funding of the account or knowledge of how it works, because, you know, it's never hurt to have slightly more knowledge in a financial field, especially in the markets. I find if you're working on, you know, growing money, growing your account, growing your finances, you know, the end goal of financial freedom or whatever you're looking for, every little fact you have and every little bit of information that can help you make more money is worth something to you, whether you see it right now or not. And just looking at it, even with your regular paycheck, I find starting off frugality and understanding where your expenses are, and if you can limit them, is definitely a key to success in trying to fund your account. So let's say you have a paycheck of $500. If suddenly you only need $400 for all your expenses and everything else you have, if you can even just put $100 from that paycheck into your account, even if it's not enough money to start investing with now, you can collect interest. If you're doing, you know, free trading software, if you're doing a free broker kind of thing, you could invest that money. Even if you just put in a dividend stock and start collecting dividends, you're making something. You know, if you throw it in a swing trade in a tech company, you end up pulling out 10%. You're making something. Right off the bat, you aren't going to be making a lot. But if you can start using the money you have and even put the money aside, if you get to a position, as I said at the start, where you can start to see the percentage goal is realistic to the kind of, you know, income you want to be making in the stock market, then that's where you can start to get in this. Like, if you have 10 paychecks and you can only put $100 in each time, after those 10 paychecks, you will have $1,000. And you know, if $1,000, if you're making, you know, 5%, you can make $50 a week. If $50 a week is something, you know, something you can see to be worth it for you right off the bat, then all of a sudden this strategy makes perfect sense. It's not fun at the start, but during this time, you know, in the evenings, you could be doing research in the stock market. So when you finally have your lump sum, you know, needed, $1,000, $10,000, whatever it may be, yeah, sure, you might have taken some time, and, you know, it might have not been the most fun thing, but now you have the knowledge behind it. You can start paper trading while you're trying to wait to increase this income. Even if you're trying to grow your account, like, it's, as I said, even doing, like, you know, half an hour in the evening, just doing some, you know, understanding of the market, if you can increase your success rate in your trades, or even increase your percentage in the, you know, run of a day, that's going to exponentially grow your account. And then suddenly, you know, you might have just, and then suddenly maybe this $100 isn't needed. Maybe you can throw something else. Maybe you want to get into real estate. Maybe you just want to start going out to dinners a bit more, you know, start indulging in a bit of the luxury life off your wonderful investments you're making here. Yeah, that's about it. Thanks for watching. Be sure to hit that like button. It does really help the algorithm, and it will show that if you're looking for more of these videos, I can definitely be pumping them out. Yeah, as always, when it comes down to investing, it's the mentality that you bring. So yeah, let's have a glass half full kind of attitude here. Let's get our knowledge in.
Knowledge.
I'm John Bowles. As always, you know, let's get our finances in check. You know, let's start making some money. Let's make 2020 the year that you're gonna remember. Stay sendy, everyone. Thanks.